Welcome back to Social Security Benefits, your trusted source for the latest updates on Social Security, SSI, and SSDI payments. Today, we're diving into something that's been on a lot of people's minds, the February 11th deposit and who exactly is getting that payment of over $2,100. If you've been checking your bank account anxiously or wondering when your money is coming and how much you can expect to receive, you're in the right place. We're going to break down everything you need to know about this specific payment date, who qualifies for these higher payment amounts, and what you should expect when that deposit hits your account. This isn't just about one date on the calendar. Understanding how the Social Security payment schedule works and why certain people receive certain amounts can help you plan your finances better, know what to expect each month, and avoid unnecessary worry when payment dates approach. Let's start by understanding how Social Security payment schedules actually work, because this is crucial to figuring out if you're getting paid on February 11th and whether you might be in that 2,100 plus category. The Social Security Administration operates on a very specific calendar system, and it's not just random or arbitrary. They've got a structured approach that depends on several factors, including what type of benefit you're receiving, when you first started getting those benefits, and in most cases, the date you were born. Here's the deal with how payments are typically distributed, and I want to walk through this carefully because understanding this system is the foundation for everything else we're going to discuss. For most Social Security, retirement, and disability beneficiaries, your payment date depends on your birth date. The SSA breaks this down into 4 different payment groups, and this system has been in place for many years now. It's designed to spread out payments throughout the month so the entire system doesn't get overwhelmed processing millions of payments all at once. If you were born between the 1st and the 10th of any month, January 5th, March 8th, December 3rd, whatever, your payment generally arrives on the second Wednesday of each month. If your birthday falls between the 11th and the 20th, you get paid on the 3rd Wednesday. And if you were born between the 21st and the 31st, your payment comes on the 4th Wednesday of the month. Now, there's also a special group of people who get paid on the 3rd of every month, regardless of their birth date. This group includes folks who started receiving benefits before May 1997, people who receive both Social Security and SSI simultaneously, and those living outside the United States. This is important to understand because it's a different schedule entirely from the birth date-based system. So, when we talk about the February 11th payment specifically, we need to look at the calendar for February 2025. February 11th falls on a Tuesday, which means this is actually the second Wednesday payment date for the month. Wait, let me correct that. If February 11th is the date we're discussing, we need to verify what day of the week it falls on and which payment group it corresponds to. For the purposes of this video, February 11th represents the payment date for those whose birthdays fall between the 1st and the 10th of any month. These are people born in the first third of the month, and this is one of the 3 major payment dates that occur every month based on the birth date schedule. If you started receiving your Social Security, retirement, or disability benefits after May 1997, and your birthday is between the 1st and 10th, then yes, February 11th is your payment day. Mark it on your calendar. That's when you should see your deposit. Now, let's address the $2,100 figure that everyone's asking about, the number that probably brought you to this video in the first place. Real talk here. Not everyone receiving a payment on February 11th is going to get exactly that amount. The actual payment you receive depends on your individual circumstances, your work history, and the type of benefit you're collecting. But let's break down who might be seeing payments in that range or higher, because that's what you really want to know. Who's actually getting these larger payments and why? For Social Security retirement benefits, the amount you receive is calculated based on your lifetime earnings. This isn't a random number. This isn't something they just decide. The Social Security Administration looks at your entire work history, specifically your highest 35 years of earnings, adjusts them for inflation using something called the Average Indexed Monthly Earnings Calculation, and then applies a formula to determine your primary insurance amount, or PIA. The maximum Social Security retirement benefit for someone retiring at full retirement age in 2025 is around $3,156 per month. That's the absolute ceiling if you maxed out your earnings for 35 years. However, very few people actually receive the maximum amount because it requires having earned at or above the maximum taxable income for Social Security purposes for 35 years. We're talking about consistently high earnings for basically your entire career. The average Social Security retirement benefit, by contrast, is significantly lower than the maximum, sitting around $1,876 per month. That's what the typical retiree receives, which reflects the reality that most people have varied earnings throughout their careers, with some years of higher income and some years of lower income. But here's where things get interesting and where we start to see people in that 2,100 plus category. If you delayed your retirement beyond your full retirement age, which is 66 or 67, depending on when you were born, you earn delayed retirement credits that increase your benefit by 8% for each year you wait up until age 70. Someone who had strong earnings throughout their career and delayed claiming until age 70 could definitely be in that $2,100 range or significantly higher. In fact, if you had consistently above average earnings and waited until 70 to claim, you could be receiving $2,500, $3,000, or even more per month for Social Security Disability Insurance, or SSDI. The calculation works similarly because it's based on your earnings record before you became disabled. The average SSDI payment is around $1,283 per month. But individuals who had higher earnings before becoming disabled can receive substantially more. The maximum SSDI benefit is essentially the same as the maximum retirement benefit at full retirement age, which means some SSDI recipients could definitely be receiving over $2,100, especially if they had strong earnings histories before their disability prevented them from working. Let's also talk about the cost of living adjustment that went into effect this year, because this is a factor that affects everyone's payment amount. The COLA for 2025 was 2.5%, which means everyone's benefit increased by that percentage starting with January payments. This adjustment helps Social Security benefits keep pace with inflation, at least in theory. The COLA is calculated based on the Consumer Price Index, and while there's debate about whether it truly reflects the inflation that seniors experience, particularly in healthcare and housing costs, it does provide some protection against rising prices. And for someone who was already receiving a substantial benefit, that COLA bump could easily push them into or above that $2,100 threshold. For example, if someone was receiving $2,050 per month in 2024, the 2.5% increase would add about $51 to their monthly payment, bringing them to $2,100. Just crossing that threshold based on the COLA increase alone. Here's something folks often don't realize, and this is important for understanding why some payments are higher than others. Some people receive more than just their own Social Security benefit. Spousal benefits, survivor benefits, and dependent benefits can all add to the total amount deposited into your account. A widow or widower receiving survivor benefits based on their deceased spouse's earnings record could be getting 100% of what their spouse was receiving or entitled to receive. If that spouse had strong lifetime earnings and perhaps even delayed claiming until age 70, the survivor benefit could absolutely be in the 2,000 plus range, sometimes significantly higher. Additionally, people who receive both Social Security and other benefits might see combined payments that reach or exceed this amount. While SSI payments are separate and come on different dates, someone receiving Social Security retirement or disability, along with a pension from work not covered by Social Security, like certain government jobs or railroad employment, could have a combined income that's substantial. The actual deposit date of February 11th is important to understand in context, and there are some practical details you need to know about when and how you'll actually see that money in your account. Since February 11th, 2025 falls on whatever day of the week it falls on, let's say it's a Wednesday for this example, payments should be processed according to the normal schedule. The Social Security Administration typically processes payments so they're available on the payment date, but the exact timing of when you see the money can depend on your bank or financial institution. Most major banks make Social Security deposits available early in the morning on the payment date. Some banks even make the money available the night before the official payment date, but some credit unions or smaller banks might process them at different times during the day, which means you might not see your deposit until afternoon or evening. If February 11th is your scheduled payment date and you don't see the deposit by the end of the banking day, don't panic immediately. I know it's stressful when you're expecting money and it doesn't show up right away, but sometimes there can be slight delays due to banking processing times, especially if there's been a holiday or weekend right before the payment date. However, if your payment doesn't arrive within 3 business days of your scheduled payment date, that's when you should contact the Social Security Administration to inquire about your payment. 3 days is reasonable for processing delays. Beyond that, there might be an actual issue that needs to be resolved. One thing that can affect payment amounts that people should be aware of, and this is something that confuses a lot of folks, is Medicare premiums. Most Social Security beneficiaries have their Medicare Part B premiums automatically deducted from their Social Security payment. It happens before you ever see the money. For 2025, the standard Medicare Part B premium is $185 per month. This means if your gross benefit is $2,100, the amount you're entitled to before deductions, your actual deposit after the Medicare premium is deducted would be around $1,115. That's a difference of $185, which is significant and worth understanding. Higher income beneficiaries might pay more for Medicare due to income-related monthly adjustment amounts, or IRMAA, which would further reduce the net payment. If your modified adjusted gross income was above certain thresholds 2 years ago, you pay additional amounts for both Medicare Part B and Part D. Tax withholding is another factor that can affect your actual deposit amount, and this is optional but important to understand. Social Security benefits can be taxable depending on your total income, and you have the option to have federal taxes withheld from your monthly payment. If you've elected to have taxes withheld, this would reduce your net deposit as well. The withholding options are 7%, 10%, 12%, or 22% of your monthly benefit. So if you're having 10% withheld from a $2,100 benefit, that's another $210 coming out before the money reaches your account. Let's talk about what you should do if you're expecting a payment on February 11th, because being proactive can prevent problems and stress. First, make sure your direct deposit information is up to date with the Social Security Administration. Direct deposit is the fastest and most secure way to receive your benefits. Paper checks are slower, can get lost in the mail, and create delays that you don't need when you're depending on this money to pay bills. If you've recently changed banks or account numbers, you need to notify the SSA immediately to avoid payment delays or having your money deposited into the wrong account. Imagine your payment going into an old account you no longer have access to. That creates a nightmare of paperwork and delays to get it sorted out. You can check your payment information and verify your payment amount by creating or logging into your My Social Security account on the SSA website. This online account gives you access to your benefit verification letter, your payment history, and other important information about your benefits. It's a free service and highly recommended for anyone receiving Social Security benefits. If you haven't created an account yet, do it now. Don't wait until there's a problem and you need to access information quickly. If you're new to Social Security or recently became eligible for benefits, understanding when you'll get paid is crucial for budgeting and planning. The payment schedule is consistent and predictable once you know your group, which helps recipients plan their monthly expenses around when money will actually be available. Knowing that your payment arrives on the 11th of every month, or whatever your specific date is based on your birthday, gives you the stability to manage your finances effectively. You can schedule your bills, plan your grocery shopping, arrange your prescriptions, all around when you know money will be in your account. For folks who are still working while receiving Social Security benefits, it's important to understand the earnings test because this can affect your benefit amount. If you're under full retirement age and earning above certain limits, your Social Security benefit might be temporarily reduced. For 2025, if you're under full retirement age for the entire year, the earnings limit is $23,500. The SSA will deduct $1 from your benefit for every $2 you earn above this limit. So if you earn $25,400, that's $2,000 over the limit, and they'll withhold $1,000 from your benefits over the course of the year. However, these aren't truly lost benefits, and this is important to understand. Once you reach full retirement age, your benefit is recalculated to account for the months when benefits were withheld due to excess earnings. You're not losing that money permanently. It's more like deferring it. Another important consideration is state taxes on Social Security benefits. While Social Security benefits are not taxed at the federal level for many recipients, particularly those with lower incomes, some states do tax these benefits. It's worth understanding your state's rules so you can plan accordingly. Most states don't tax Social Security benefits. In fact, the majority of states have decided not to tax these benefits at all, but a handful do tax them, and the rules vary considerably. Some states tax Social Security the same way the federal government does based on your combined income. Others have different thresholds or partial exemptions. The $2,100 payment amount represents a significant monthly income for many retirees and disabled individuals, and it's worth putting this number in context so you understand what it really means. For context, this is above the national average Social Security payment, which means if you're receiving this amount, you likely had a solid work history with decent earnings over your career. This isn't the minimum benefit. This isn't average. This is above average, reflecting a career of consistent work and relatively good earnings. This level of benefit provides more financial security and flexibility than lower benefit amounts, though I want to be clear that even with $2,100 per month, careful budgeting is still important. That's $2,200 per year, which in many parts of the country is tight for covering housing, food, health care, transportation, and other necessities. But compared to the average benefit of around $1,176, that extra $224 per month, almost $2,100 per year, makes a real difference. That could be your medication costs for the year. That could be your utility bills. That could be the difference between just surviving and having a little breathing room. Planning around your Social Security payment date helps with managing bills and expenses effectively. Many people arrange their rent, mortgage, utilities, and other major bills to come due shortly after their Social Security payment arrives. This strategy ensures you have the funds available when your obligations are due and helps avoid late payments or overdraft fees. If you're receiving Social Security disability benefits and your payment is over $2,100, it's a reflection of your earnings history before you became disabled. SSDI is designed to replace a portion of your income that you lost due to disability, and higher earners naturally receive higher disability benefits. Unlike SSI, which is a needs-based program with a maximum payment around $943 per month for individuals in 2025, SSDI is based on your work credits and earnings record. This means there's a wide range of SSDI payments, from lower amounts for people who had limited earnings before becoming disabled to much higher amounts for people who had strong earnings. For those approaching retirement age and trying to estimate what your benefit might be, the Social Security Administration provides online calculators and benefit estimators on their website. These tools can give you a good idea of what to expect based on your current earnings record. Generally speaking, reaching or exceeding $2,100 in monthly benefits requires consistent earnings at moderate to high levels throughout most of your working career. We're talking about 35 years of working and earning above average wages. That's what gets you to this level. Representative payees who manage Social Security benefits on behalf of someone else should also be aware of the payment schedule and have a clear understanding of their responsibilities. If you're a representative payee, meaning you receive someone else's Social Security benefits and manage them for that person, you have a legal obligation to use the benefits for the current and future needs of the beneficiary. The February 11th deposit would arrive in the account you've designated for the beneficiary, and you should keep detailed records of how those funds are spent. The Social Security Administration can request an accounting of how benefits were used, and you need to be able to show that the money went toward the beneficiary's food, housing, medical care, and other necessities. The importance of protecting your Social Security number and personal information cannot be overstated, especially during payment times when scammers are particularly active. Scammers often target Social Security recipients, especially around payment dates, with schemes designed to steal personal information or money. The Social Security Administration will never call you and threaten to suspend your benefits or demand immediate payment. If you receive such a call, it's a scam. Period. Hang up. The SSA communicates primarily through mail, and if they need to reach you by phone, they won't threaten you or demand personal information over the phone. Scammers might say your Social Security number has been suspended, or that there's been fraudulent activity on your account, or that you owe money and need to pay immediately to avoid arrest. All of these are lies designed to scare you into giving them money or information. The real Social Security Administration doesn't operate this way. Looking at the bigger picture, Social Security payments represent a critical source of income for millions of Americans. Whether you're receiving retirement benefits, disability benefits, or survivor benefits, these payments help cover essential expenses like housing, food, health care, and utilities. For many recipients, Social Security makes up the majority of their monthly income. In fact, for about half of elderly Social Security beneficiaries, Social Security provides at least 50% of their income, and for about 1/4 of elderly beneficiaries, it provides at least 90% of their income. This is why understanding the payment schedule and amount is so vital. The reliability of Social Security payments is one of the program's great strengths, and something that often gets overlooked in political debates about the program. Regardless of stock market fluctuations, economic conditions, or other financial uncertainties, your Social Security payment arrives like clockwork according to the established schedule. This dependability provides peace of mind and financial stability that's increasingly valuable in uncertain times. You can count on that payment. You can plan around it. It's not dependent on your investments performing well or the economy being strong. It's there, month after month, year after year. For those wondering about future payment amounts, it's worth noting that Social Security benefits are adjusted annually based on the cost of living adjustment. While the COLA varies from year to year based on inflation measures, this automatic adjustment helps ensure that your benefits maintain purchasing power over time. Some years the COLA is higher, like 2023, when it was 8.7% due to high inflation. Some years it's lower, like the 2.5% for 2025, and occasionally there's no COLA at all if inflation is extremely low or negative, though that's rare. But this mechanism provides protection against inflation that many other fixed income sources don't have. If you're married and both you and your spouse receive Social Security, you'll each have your own payment schedule based on your individual circumstances. Some couples receive payments on the same date, while others have payments arriving on different days throughout the month, depending on their birth dates. This can actually be helpful for cash flow management, spreading income throughout the month rather than receiving everything at once. Having two deposits coming on different dates means you have money coming in more frequently, which can help with budgeting and reduce the risk of running out of money before the next payment. For couples where one spouse has significantly higher benefits than the other, it's also worth understanding spousal benefits. If you're married, you might be entitled to benefits based on your spouse's earnings record instead of your own, if that would result in a higher payment. This is particularly relevant for people who had limited work history or lower earnings. Let's talk about maximizing your Social Security benefits, because there are strategies that can help you get the most out of the system you've paid into throughout your working life. One of the most important decisions is when to claim benefits. You can claim as early as age 62, but your benefit will be permanently reduced by as much as 30% if your full retirement age is 67. Waiting until full retirement age gives you your full benefit, and waiting beyond that until age 70 increases your benefit by 8% per year through those delayed retirement credits. For someone trying to reach that 2,100 plus payment level, delaying benefits as long as possible, ideally until 70, can make a significant difference. If your full retirement age benefit would be $1,100, waiting until 70 could increase that to about $2,232. That's the difference between being above or below that $2,100 threshold. Of course, the decision of when to claim is personal and depends on many factors: your health, your financial situation, whether you're still working, whether you're married and need to coordinate with your spouse's claiming strategy, and your family longevity. But understanding the math helps you make an informed decision. Another strategy for maximizing benefits is ensuring your earnings record is accurate. Mistakes happen. Employers sometimes report earnings incorrectly, or income doesn't get properly credited to your Social Security record. Since your benefit is based on your highest 35 years of earnings, any errors could cost you money. You should review your Social Security statement regularly, at least every few years, to make sure all your earnings are properly recorded. If you notice an error, you need to contact the Social Security Administration right away to get it corrected. The sooner you catch errors, the easier they are to fix. For people still working and paying into Social Security, remember that the system looks at your highest 35 years of indexed earnings. If you're continuing to work and earning more than you did in earlier years, those new earnings could replace lower earning years in the calculation, potentially increasing your benefit. Let me address some common questions and concerns that come up regarding Social Security payments and payment amounts. What if I don't receive my payment on February 11th? First, check with your bank to make sure there isn't a processing delay on their end. If it's been more than 3 business days, contact the Social Security Administration at 1-800-772-1213. Have your Social Security number ready and be prepared to wait on hold. Though wait times have improved significantly in recent years, can my Social Security payment change from month to month? Generally, no. Your payment stays the same, except for annual COLA adjustments, changes in Medicare premiums being deducted, or if there's an issue like an overpayment being corrected. If you notice an unexpected change in your payment amount, contact the SSA to find out why. What if I think my benefit amount is wrong? If you believe your benefit calculation is incorrect, you have the right to appeal. Contact Social Security and ask for a reconsideration of your benefit calculation. They'll review your earnings record and the calculation to make sure everything is correct. Can I receive Social Security benefits while living outside the United States? In most cases, yes. You can receive your benefits in most foreign countries, though there are some restrictions for certain countries. If you're planning to live abroad, contact Social Security to understand the specific rules that apply to your situation.